I now hand the conference over to Mr. Nishant Vyas from ICICI Securities. Thank you, and over to you, sir.
Thanks, Rayo. Good day, everyone, and thanks for joining us today for the call. From the management side, we are represented by Mr. Arenaza Alvarez, the CEO, Mr. K. Jayaprakash, the CFO, Mr. Vikas, Sinha, Senior Vice President Strategy, and Mr. Oroitz, Chief Business Controller. Now, I would like to hand over the call to the management for their initial remarks. Over to you, sir.
Yeah, hi, this is Vikas. Good afternoon, everyone, and good morning to those who are joining from Europe. I welcome all of you on this call, as also Ander, our CEO. Thank you for being with us in these trying times of the COVID-19 crisis. I hope and wish that all your loved ones are taking care and are safe. At the outset, let us give you a quick update on the COVID situation at our plant. Europe, by and large, has stabilized and normalcy is fast returning. In India, the pandemic continues to rage and we have had approximately 40 cases in our plant. Most cases are mild and many have recovered and come back to work. But we have also had a sad fatality at our plant in Bengaluru. The entire CIE and MCIE family stands together in offering our heartfelt condolences to the bereaved family. MCIE has drafted protocols regarding safe running of plants in adherence with the post-COVID-19 guidelines issued by relevant authorities in the geographies in which we operate. All plants have implemented safety and hygiene protocols like wearing of face masks, physical distancing norms, and workplace sanitation to make sure that the health of our personnel is assured. Continuous awareness of these protocols among employees is being carried out. The protocols are being reviewed regularly and updated based on revisions and guidelines received from local authorities. We have had these protocols audited by a third party to ensure that gaps are closed. A crisis management group to handle the pandemic has been constituted at each plant to review the situation and react as warranted. We are also trying to ensure that personnel at our Indian plants feel safe. We have tied up with hospitals and ambulance services and empaneled doctors on a 24/7 helpline to help answer queries. All cases have been reported to local authorities and they have been satisfied with the response. Due to these actions, all plants are functioning normally. Before we talk about the results, let me state that Q2CY20 has been the most difficult quarter in the history of NCIE. Given the fact that the pandemic situation continues, especially in India, we are faced with a lot of uncertainty going forward. At the same time, the demand recovery in June and July has been better than envisaged, and this will have a positive impact on our future results. Let us now go to the results. On page 3 of the presentation, we can see that over this quarter, CIE's stake in MCIE has increased to 58.02% from the earlier holding of 56.2% and reiterates our parent CIE's faith in MCIE. We start with Q2CY20 results for India on page 4. Sales dropped by 73% year-on-year and EBITDA was negative at minus 12.8%. In this quarter, the sales dropped to below break-even point as April and May were heavily affected by the lockdown. Restructuring actions have already been implemented to reduce our break-even levels at all plants. Sales in June have already recovered better than our expectations and we did make a positive EBIT in the month of June. There are 2 points that need to be highlighted regarding MCIE India Q2CY20 results. One pertaining to Billforge Mexico, which is part of the India results, and the other to Aurangabad Electricals Limited. During the quarter, the management has reassessed the functional currency of its subsidiary Billforge Mexico and changed it to US dollars from January 1, 2020 in accordance with Ind AS 21, the effects of changes in foreign exchange rates. Due to this change, the loan from group company in USD, which was restated into Mexican peso as at March 31, 2020, resulting in foreign currency loss of rupees 418 million for the group for the quarter ended March 31st, 2020, has been reversed since the change is effective from January 1st, 2020, resulting in the revision of the March 31st, 2020. That's the first point. The second point regarding AEL, pursuant to the receipt of eligibility certificate under Maharashtra Government Package Scheme of Incentive 2013, the PSI 2013 scheme, by AEL, the company has recognized grant income of rupees 122 million for the quarter and 6 months ended June 30, 2020 in accordance with Ind AS requirements. This incentive is in the form of refunds from the government of Maharashtra on actual VAT, SGST paid by the company from February 1, 2016 till date. The maximum limit of the incentive is rupees 2522 million and can be drawn up to 2023. On page 5, we have the results for MCI Europe for Q2C20. Here too, the lockdown has affected sales and was below break-even for our business. Sales fell 59% and EBITDA of minus 10.1%. Since the truck and off-road markets in Europe are experiencing a significant downturn, we are taking restructuring actions at Germany and Italy, which respectively cater to the truck and off-road market. The Q2C20 EBITDA for MCI Europe is depressed by about rupees 344 million on account of this restructuring cost. However, in the month of June, we were able to generate a positive EBITDA if restructuring costs were excluded. And now if we go to page 6, we'll see the consolidated Q2C20 results, which are a combination of the India and Europe results explained earlier. Sales dropped by 65% year-on-year to rupees 7113 billion at a negative EBITDA of minus 11%. On page 7, we have the H1C20 results for MCI India. There has been a 41% drop in sales vis-a-vis first half of C19. The EBITDA was positive at 6.5% and EBIT was negative at minus 0.9. The results are due to the double impact of GST transition-related uncertainty in Q1 and the COVID situation in Q2. As mentioned earlier, we have undertaken restructuring activities during Q2 and we are expecting that these will have a positive impact. On page 8, we have the H1C20 MCI Europe results. Sales fell 45% year-on-year to rupees 13,184 million, but EBITDA was overall positive at 3.3% and a negative EBIT at minus 1.2%. In Europe as well, the difficult market conditions were further compounded by the COVID crisis. Again, as mentioned earlier, restructuring actions have been taken and we are happy to state that the EBIT, excluding restructuring costs, is positive. On page 9, we present the consolidated H1C20 results of MCI. In H1C20, MCI sales dropped 44% year-on-year to rupees 23,147 million at an EBITDA of 4.7 and an EBIT of minus 1.1 with an EBIT of minus 2.6%. We then move on to page 11, where we have the balance sheet position for the half year ended 30th June 2020. The ratios have been badly affected by the ongoing crisis, but we should highlight that our net financial debt to EBITDA remains under control at 2.7. On page 12, you will see the cash flow situation as on 30th June 2020. Net financial debt has increased to rupees 14,541 million, largely due to currency forex exchange fluctuations between Euro and INR, which there's an impact of rupees 840 million, which is included in others. There is also an Ind AS 16 debt impact. Without these two impacts, the net financial debt would have been stable despite the negative business environment, and the ratio of debt to EBITDA would be even healthier. On page 13, we have tried to specify the strategy and actions that MCI is taking during this time. A comprehensive program has been drawn up to improve profitability by emulating CIE's model of manufacturing excellence. We aim to grow significantly faster than the market and aim to profit from the opportunities that the crisis is throwing up, namely resourcing from struggling suppliers and opportunities as OEMs de-risk their China exposure. All teams have been tasked to acquire new customers and increase exports. Greater scrutiny of Capex proposals will be made and new capital will be committed after great deliberation. The immediate focus is to restore pre-COVID margins at all our verticals. In conclusion, we would like to repeat what we have stated in earlier conversations, that every crisis is also an opportunity. We are looking inwards to improve ourselves by taking various measures focused on profitability improvement and making our businesses more competitive. And we are looking outwards at the same time to continuously shore up our order book as we believe that the crisis will throw up many new opportunities. We assure all our stakeholders that MCI continues to remain calm, optimistic and confident amidst all this turbulence. Thank you very much, and now we proceed to Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, thanks for taking my question. First thing, with respect to this incentive for Aurangabad Electrics, is this entirely for prior period, or there's some portion pertaining to 1H CY20?
JP, can I request you to take that?
Yes. So the large part, I would say, this is accumulation up to June 20 from 2016. So almost 90-95% would be pertaining to the previous period. And going forward in the next 2 quarters, we can expect another 20 million. So that's the proportion you can make out for CY20.
Okay, so CY20 would be close to about 30-odd million. Would that be fair to say?
Yeah, let's say 40, because we are expecting 18 into 2, 36 million is what you can take for CY20.
Okay, got it. Yeah, and second question pertains to, we have talked about growing ahead of the market. So what gives you confidence in terms of, can you talk about few things which we are doing which will lead to this faster growth than market in near to medium term and in the long?
So I'll request Andrew to take that, but before he takes the question, let me say that our confidence stems from the work that we have been doing since Andrew took over in September 2016. I think his focus has always been to improve our plants to a level where we can be able to serve customers globally anywhere. So, that gives us the confidence, and therefore, we are going out, getting newer orders. As there are enough queries that we are seeing. Of course, the situation is so uncertain that we don't know how much of the queries that are coming out of the resourcing opportunities or from China or from elsewhere will actually, fructify. That will happen when things settle down. But our confidence stems from the fact that we are now, more sure of our plant capabilities to be competitive. But with that, I'll leave Andrew to answer the question.
Yes, as Vikas mentioned before, we think that this crisis situation is a good opportunity for companies like us. Okay, our perception is that we are a solid company, and during all these years we have been working on the internal efficiency, improving quality improvement, and also we have implemented all the standards of CIE manufacturing model in our verticals in India. So during all this period, we have improved a lot our reliability as a supplier. So what we are getting now is that we are being nominated and we have been awarded with several projects for exports in the recent months. So we are quite optimistic on the growth of our export rate, that we can be now about 10 to 15% of our production is to export. In the future, we will grow this percentage, and we are already getting new businesses, and we have been awarded with some big customers for Europe and for USA. So this is a fact. Also, we see that the problems in some of our competitors will bring us the consolidation in the market. So we are already getting some of the production from our distressed competitors, and I think this is also an opportunity to consolidate the market and to grow the business. And in this sense, we are receiving news every day. And yesterday, for example, we got some important business from one of our competitors for our aluminum company, AEL, Aurangabad Electricals. and we already launched all the activities to start the production of these components in 3 months. Okay, we are talking about, it's not a big business, but we are talking about 350 million rupees of turnover that will come immediately. So this is the environment, and on top of that, we have the Chinese import reduction. So we think that the production, the localization of the production in India will be a fact in the next month. We are already receiving certain businesses from our customers, for example, in the gears division and also in the magnetic product division. So this is a fact that we are already, that is already materialized and it's a reality. So with those expectations, together with the recovery of the market, we think that the next quarters we will see an improvement in our margins, and our internal target, as Vikas mentioned, is to come back to the previous margins, the pre-COVID margins, by the end of the year, or at least we say in a couple of quarters we should be close to those margins. Okay, so that is our expectation, that is our aim. I think the team is 100% motivated and committed to these figures and to these ratios. So we feel not comfortable, because it's not the word. I mean, we are worried because of the situation, and the situation is tough for all of us, because we need to accomplish all the restructuring jobs and that we are doing in all the divisions, not only in Europe but also in India. We are doing this restructuring job. But the expectations and the future, we think that can be good for all of us. So that's our task. That is those are our targets of improving our margins and being able to consolidate the market in Mahindra CIE and be a winner after this crisis pass. So that is the general view that we have about the evolution of our company.
Thanks. And lastly, with respect to Capex, so any guidance on Capex for India and Europe?
JP, can you take that?
So right now, I think on console level, we have about 1.4 billion spent already, out of which a lot was already committed. So I think for the balance here, we can commit, we would probably be able to restrict it to 1 billion.
Yeah, regarding the Capex in the last year, we have been, let's say, confirming, or we have been executing the projects that we launched during 2019 and previously. So we decided to go on with all the committed investments with the customers, with the new projects, with the new plants. We are building a new plant in Osur, in Belfort. We are building also a new plant in Aurangabad. So we decided to continue with those already launched investments. Regarding the future Capex, in the last 3-4 months, we have of course stopped the new expenses. We decided to take care of the future, but we think that the investments that we are doing now, they will pay dividends. They will bring us the required profitability in the midterm. So the company, we continue with our growth strategy, and of course, let's say with the most advanced technologies and the automatization and efficient production lines, and that is our strategy, and we will keep this strategy even in this difficult time.
Got it. Thanks. I'll come back. Thank you.
Thank you. The next question is from the line of Shriman Dudoya from Unifi Capital. Please go ahead.
Yeah, thanks for the opportunity. So question again on the Aurangabad electricals, the incentive that we have reached. So is the understanding right? For CY20 it is 36 million, and we will continue to get this incentive for the next few years.
Yes. Yes, that's correct.
What time period is this?
See, the incentive gets accumulated up to 2023. It's a 7-year incentive. But the way it gets, and it will come in terms of cash, and we keep on applying. It's the GST that we pay, the SGST, the state GST that we pay. The maximum of 2.5 billion is what we are entitled to. As of now, sorry, are you able to hear me? Hello?
Hello, sorry, I missed your statement last.
Okay. So I was saying this is a 7-year incentive. So it started from 2016. It lapses after 2023. It is a refund of the state GST that AEL will pay during this period. As of now, we have a accrued receivable of about 1 billion, and it comes into the P&L vis-a-vis the depreciation that you charge on the assets that were bought under this scheme.
Okay. Right. And you are saying the maximum incentive is capped at 2.5 million a year.
2.5 billion is what our eligibility certificate talks about.
Okay. Got
over the 7 years. Okay.
Okay, got that. Secondly, so there was also this 34 crores of restructuring costs in Europe towards the restructuring. What was this related to, and how will this impact on the financials going forward?
Okay. These restructuring jobs mainly are coming from dismissals. Okay. You know that in Europe the cost of the layoffs is very high, and we set certain social plan. The name is we implemented a social plan. With this social plan, you agreed the layoff of certain people according to certain parameters, and we have already executed this social plan in MFE in our plant in the south in the GSA, and we already also implemented this social plan in Metal Castello. Okay, let's say the amount of this 344 million rupees are already accounted in our P&L in the month of June, and we will execute the layoffs during the next 2-3 months. Okay, and this is mainly the explanation of the restructuring cost. The impact of these layoffs, of course, we will have a big reduction on approximately 4 million euros per year. Okay, this is 4 million euros per year of cost reduction thanks to these layoffs. Okay. Of course, what we are doing, the main logic behind all these activities is that what we see is that the market has dropped in the last year, not only because of the vehicles, but also because of the market cycle evolution, especially in the commercial vehicles and in the off-highway production products. I mean, the agriculture and big machinery. So what we did is we reduced our break-even levels with this fixed cost reduction. Okay, that was the logic. So our aim is to get back to the previous margins despite the drop of the market.
Sure, sir. Is there more restructuring costs to come in the coming quarters, or are we done with this?
Okay. We are now waiting on how the market will behave, because we are not sure that the revamp of the market will come in the next months. But in Metal Castello we have already done. We have finished we don't see any more social plan or reductions. In GSA we also finished the activity. Perhaps in the north of our plant in Sonneweiss we can have additional layoffs to manage in the future. But right now, what we are now is preparing the plan, looking at the market and waiting to see if we need to accomplish additional layoffs, but focus only in the Schöneweis plant. The rest of the plants are already finished.
Sure, that's helpful. So if you could comment on the current utilization levels, both in the India business as well as the Europe business.
Okay, the utilization levels are quite low, especially because of the virus impact. Okay, you know that in April the utilization level in India was close to zero because we were in complete lockdown in our Indian plants. In May we could be at 20% more or less, 20-25%, and in June we are at 50%. So this is the growth that we have had in the last month, and in the next future we can foresee, and according to our customer demand, we will see more growth in the next quarters. Okay, but you can consider that we can be at 50% in this moment in India. And regarding Europe, the impact of the virus has been a little bit less than in India, and in April we were at 20-25% of capacity utilization. In May at 40% more or less, and in June we can consider 55-60%. Okay, so that is that has been the evolution in Europe, and we expect to have in the next quarter an utilization of 65-70%. That could be the near future.
In Europe, 65 to 70% Europe.
Yes, also in India. I mean, not clear, but this 65-70% can be the evolution and the forecast for the next quarter. Sorry, according to our customer demand. What is we are not also we cannot commit to any figure on that because we see a big volatility, and of course this additional lockdowns that happened in India perhaps can reduce the turnover in the next months. But in Europe, it seems that the situation is recovering fast, and we are now above the break-even level, so we are now in a positive EBITDA and touching the positivity. So let's say that the evolution is promising.
Sure, sir. So in the previous quarter's conference call, you highlighted about the incentive from the European governments towards the labor cost. How much was that number in the quarter two?
Yeah. Okay. The incentives that we are getting in the European countries, I mean, it varies from the different countries, but in Italy, for example, what we have is the kind of Cassa Integrazione is the name of the program, and this gives you saves approximately the 80% of the total cost of the people. That is of the labor. That is the reduction that is given in Italy. Of course, we are not applying to 100% of the people because we are right now at a production rate of approximately 50%. So we have in Italy approximately 120 people in Cassa Integrazione. Okay. Oroitz is now calculating the amount and give you some figures in 1 minute. Okay. And regarding in Germany we have the Kurzarbeit, and that is also similar program than Cassa Integrazione in Italy. And in this program, the saving for the company is approximately 70% of the total cost of the employee. Okay, so we pay 30%, the company pays 30%, and the state pays 70%. So we have applied this in April and May. In June we have reduced a lot because now we are preparing the stocks and we are making the production for the summertime. So the benefit we took is a little bit less than the previous months. But that is the amount that you can have. I mean, something like Oroitz.
Yes. 1 minute.
Okay, he's now calculating to give you the accurate figure. Okay.
Sure, sir. So lastly, you talked about, the opportunity from the import substitution of products from China. And in our product profile, what is the opportunity size that we are looking at, and how quick, we could kind of capture this opportunity?
Yeah. Okay. We have different situations in each vertical. Okay, but for example, as I mentioned before, in the gears division, our customers, they are buying a lot of gears in China. Now they are moving some of them to India. So this localization is a fact, and we can have a growth of our gears division of 5 to 10% thanks to this movement. Okay, this behavior of the market, and also in the magnet business, we are seeing that the biggest magnet production in the world is in China. Now in India, we are one of the key players, probably the biggest one, and we are getting additional orders from the customers. It's too early to give you the size because this movement is just happening now, and it's difficult to give you the size. But I think that another 5 to 10% growth in our magnet division is also feasible thanks to this movement. Okay, so those are the range of growth that we expect coming from that movement.
Sure, sir. Lastly, if I could ask this question, you also talked about insourcing of products. Right now, how much is outsourced, and how much of additional revenues can we kind of capture by insourcing of products?
Yes, we have calculated the saving of the incentive in Europe, and this has been more or less 4 million euros in the quarter.
Yeah.
In Q2.
4 million euros.
Yes. In Germany and in Italy. Okay, both together.
Okay. Anything in India, sir?
No, not in India.
No, India is not any help support from the government for this kind of things. It's only in Europe.
Sure, sir. Thank you so much, and I'll get back in touch.
Okay.
Thank you. The next question is from the line of Shyam Sundar Sriram from Sundaram Mutual Fund. Please go ahead.
Yeah, hi team. Thanks for the opportunity, sir. Good afternoon. My question is in Europe. So there have been a lot of subsidy schemes announced by the various governments, which are driving the battery electric vehicles and hybrid electric vehicle sales much higher. The mix of these vehicles in the mix has also gone up to 89%, and it is continuously increasing. Now, given all this, may not be this quarter, but over the next few quarters, are we seeing any cut in terms of the production volumes for our passenger vehicle forging division in Europe? Is there any trend that is emerging because of this? And generally, what is the outlook in Europe across different divisions? Thank you.
Okay. Regarding the electrification or the growth of the electric vehicle, we think that with the subsidies, yes, it will be a sector that will grow. But you need to realize that the size of this electric vehicle business is very, very small. Okay, so the impact will be small, very, very small for us. Okay, and on top of that, you know that in Europe there is no yet any recharging infrastructure already in place. That means that the amount of electric vehicles that are sold are very, very low because there is no way to recharge the battery of the vehicle. So the last trend that we are now seeing is that the car makers, they are moving now to the hybrid cars, and they are pushing for the hybrid cars with the plug-in hybrid cars. And this trend is also very positive for us because they have the internal combustion engine and with all the transmissions plus the all the electrification of the car. So we think that this will be the trend in the next year. So answering your question, we don't see any negative impact in the next few years, and at least it will take some years to the electric vehicle to be a threat to our business.
Understood. And generally the outlook in Europe across, what are you seeing over the next couple of quarters in terms of passenger vehicles?
Okay.
Yes.
Okay. What we can expect is a recovery in the next quarters, but the recovery will not we will not reach to the 2019 volume levels, at least in a couple of years. Okay, so what we see in the next future is to a market at 75-80% of the 2019 volumes. That is the volumes we can see in the next 2-3 quarters, and then in 2021 we can consider probably in Europe 10% below 2019 figures. Those are the rough IHS forecast, and we think that will be the reality in the market. And in India, we expect that the market to recover faster than in Europe. That's our expectation. Probably we need to wait until the virus is gone. This is probably the key point in the Indian market. But once the virus is let's say we solve the virus issue, whatever with the vaccine or with the different measures taken by the government and the society, probably we will see the revamp in India. That's our expectation. And on top of that, we see that as we think that this crisis will create some stress in certain competitors, there will be a consolidation in the market. So we expect to grow above the market thanks to this consolidation that we think that will happen.
Sir, this consolidation you're talking about in Europe, sir? I mean, you did allude it in the last call, so mostly in Europe.
Yeah, in Europe, but also in India. We see that in India also. With the consolidation, we think that it will happen. This is a reality in this tough situation. In Europe, of course, because we are already perceiving this, and there is a important movement in our customers to move the production to the safer and solid and financially sound companies. But in India, we think that it will happen also, and the stronger companies will be the winners in this crisis.
Right. So just one question on this restructuring. We have received this grant, 4 million euros for this quarter from the government. Now, after receiving this grant, are we still free to, lay off or retrench employees? Is that still allowed by the government?
Yes, it is allowed. There is no limitation on that. I mean, this is a temporary support that the governments are giving due to the virus situation, and those are standard programs in both in Germany, Italy, Spain. I mean, most of the European countries, they have similar programs to support the companies when the market is down. Okay, and the point is that, of course, this support is there from the government. They give us this support to maintain the employment. But as we see that there will be a structural reduction, and especially in Germany, what we see is a slight downsizing, we think that we need to make a structural movement. That's why we go for the restructuring activities.
Sure, sir. Thank you. That's it from my side. Thank you very much, and all and best wishes.
Thank you.
Thank you. The next question is from the line of J. Daniel from Entropy Advisors. Please go ahead.
Yeah, sir. The promoters have increased their stake in the last quarter. Will this be an ongoing exercise in the current quarter? And so I just wanted a clarification on that.
Mm-hmm. Okay, this is a shareholder issue. It's a CIE decision, but what I can explain to you is that the CIE decided to increase the share on Mahindra CIE because they saw that the value and the share price was not reflecting the real value of the company. So it's an opportunity for CIE to increase the share. That was the main reason behind. And if the share price continues in this value, probably CIE will continue taking this opportunity.
So what you're saying is that CIE will continue to take advantage of the opportunity provided by the current prices.
Yeah, let's say that of course this is not my call to. This is not I cannot disclose this information because this is CIE or shareholder issue. Okay, but what I say is that probably and in these certain conditions the CIE can continue with taking the opportunity to increase the share because CIE considers the real value of the company is higher than the reflected in the share price. Okay, that's my answer.
Okay, and where would what would be the target for CIE to take its stake to? From whatever level it is at the moment, where would it want its holding to increase to?
Oh, I don't know. I don't know if there is a target on that. It's just an opportunity and increasing the share in the business because of the interesting evaluation of the company.
Okay. Thank you very much, sir. Thanks.
Okay.
Thank you. The next question is from the line of Priyaranjan from Antique Limited. Please go ahead.
Yeah, thanks. Thanks, team, and hope everybody is safe. First on the Aurangabad Electricals incentive. So if I remember correctly, that we had to pay or we have already paid these incentives to the promoter group of Aurangabad Electrical. So whatever incentive we are getting, we have to pay. Just want to understand, we have to pay to the promoter or we have already paid?
So, hello?
Yeah.
Here we need to pay the promoter only 600 million rupees, and the payment will be done in August. The rest of the fee that we collect, we don't need to pay anything else. The only contingent payment that was pending was 600 million rupees.
Okay, so after receiving these incentives, do we have to pay those 600 million?
We need to pay only those 600, but nothing else, nothing additional.
Okay.
No, Priyaranjan, it is not dependent on the cash flow. We have to pay in August. Since we have received the eligible certificate, the payout happens in August.
Okay. And secondly, on the earlier Sam has actually asked this question on the electrification part in Europe. So, after COVID, what we are seeing is that the government is incentivizing a lot to the electric side. So, even Germany has run up a program of incentivizing the electric vehicle purchase. I think even UK is talking about that, and France is also talking about that. So we have seen the market share of electric is moving up. So if suppose electric market share in overall passenger vehicle moves up by say around 10%, then say in 2021. So what can be the potential loss of business we can have? It can happen to us.
Okay, I mentioned before that we don't see a potential impact in our sales in the next few years. Okay, what we consider is that yes, there is a growth on the electric vehicles, and will be a growth because of the subsidies and the support of the government programs. But the infrastructure is not yet ready in Europe, so we don't see that this will be a huge market in the near future. What we see is, and when we talk about this 10% of the market, we are including, or you are including, the hybrid vehicles that they have a combustion engine and complete transmission. So the pure battery electric vehicle will be less than 5%. Okay, so we can consider that the maximum impact could be no more than 5% in our business. So in the next 2, 3, 4 years, we don't see relevant impact in our business. Then we need to see what will happen with the technology and how this will be managed by the government. Okay, the investment in the infrastructure, which is a huge investment to be done in the future in the different countries around the world, and in this moment of crisis and let's say when there is the governments are with a huge deficit, I think it will be tough for them to invest. So I think that the electrification will come, but it will come slower than expected.
Okay. And in terms of the business outlook for, say, Metal Castello, I think the European agriculture market was quite good this year. So how do you see, the off-highway, the Metal Castello, can it go back to the last year's number pretty quickly, or it will take much longer? Because you already have taken some restructuring out there. So your outlook on market is little benign compared to what we are seeing in terms of the agriculture market overall.
Yes, in Metal Castello we have agriculture sector components, but we have mainly off-highway vehicles market. Okay, and our main customer in Metal Castello is Caterpillar, and we devote more than 50% of our sales to the USA market. Okay, so due to the current political situation in the USA, where the elections are coming by the end of the year, in this period there is no let's say expense and investment from the government. And after that, what we expect is that the revamp will come in 2021, 2022. Okay, so that's our expectation. So we see probably a weak second semester, or at least affected by the virus plus the market drop, and then the recovery and revamp to the previous figures will come in 2021 probably, or even 2022.
And lastly, on the Mexico front, can you just update on where are we, in terms of total run rate and in terms of profitability?
Mm-hmm. Yeah, in terms of profitability, I already told in the last conference call that the company is evolving positively. Of course, we have been affected by the virus and the lockdown, and right now we are starting again the production at the reasonable levels. Okay, our expectation for the Mexican plant in the short term is we need to recuperate from the virus impact. The internal efficiencies, quality, delivery, and everything is under control, and the company is performing well. So in that sense, I am quite happy. So once the market comes, I think we will see a good profitability and a profitable business there. Okay, we are actively searching for new businesses. We have been already awarded for new businesses for different customers. So yes, we are developing the business, and I think that this virus crisis will delay a little bit the improvement of the company, but we are sure that we will fulfill the company in the next year. Okay, so that's the expectation. Expectation is in Mexico is in Bilford, Mexico is positive, and I think that we will see good figures in the near future.
Oh. Okay, that's all from my side. Thanks. All the best and stay safe.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Jigar Shroff from Financial Research. Please go ahead.
Yeah, thank you for taking my question. Sir, at the end of Q1 conference call, you had mentioned that the consolidated fixed cost of MCIE are about 100 crores per month. And sir, with all these various restructuring and cost cutting and layoff or these exercises that you have undertaken, can you envisage or give a guidance? How much have you been able to reduce the fixed cost, sir, to now per month? Thank you.
Yeah. Okay. Yes, you are right. We mentioned that figure of 1,000 crores per quarter of fixed cost, and it's true that now, as we are above this rate in June, for example, that's why we put a note in the presentation saying that we were already in a positive EBITDA in both India and Europe. Okay, we have reduced our break-even level approximately 10%. That is the approximate reduction that we have already done. That means that our break-even should be at 900 crores. So that is the amount that we can consider right now. Of course, this value is moving every day, and we are adjusting it. But the other way of looking at this figure is that my expectation is to recuperate the margins despite the drop of 15 to 20% of the turnover that we can expect in the second semester. Okay, that is the view that we have.
So we've reduced it from 100 crores per month to 90 crores per month.
No, Jigar. You know what Ander is saying, that we had mentioned that our break-even point per quarter was 1,000 crores last time. Break-even point. Okay. So the break-even point has reduced from 1,000 to 900. So there's a 100 crore reduction.
I was talking, Vikas, I was talking about the fixed cost you mentioned is 100 crores per month that you had mentioned, right? At the end of...
No, but just think of it from a break-even perspective. From a break-even perspective, it is reduced from 1,000 to 900. We can make the fixed cost calculation on the basis of contribution margin, but essentially 10% reduction is what you can take, more or less. Because, the break-even is reduced by 10%. That's right.
Achha. And it's an ongoing exercise that you mentioned.
Yes,
so any
absolutely.
target timing that you are looking at, or
what is the question, Jigar?
Any time? It's an ongoing exercise. So is it some level, some target you're looking at? Which you envisage to reach in the next 3-4 quarters?
Which is what we had mentioned earlier, and Ander had specifically mentioned that by the end of this year, we would want to go back to the pre-COVID margin.
Okay. So, you would say, 100 crore saving per annum? Is it right to say that way?
Not per annum. We are talking about per quarter.
Sorry?
Can you repeat again the question? Because we didn't catch you very well.
No. So, Oroitz, the question that Jigar is asking is if we have reduced our break-even by 100 crores or 1,000 million per quarter, so what is the actual fixed cost saving that break-even reduction translates into?
Exactly.
The fixed cost per month we have reduced more or less in 100 million rupees. So we were in 1,000 million rupees per quarter, per month previously, and now we have made this 10% reduction.
So that's the point, Jigar, that I had mentioned. The 10%.
Sorry, Vikas, I didn't understand if you could.
So the 10% reduction in BEP is roughly around 10% reduction in fixed cost. So that 100 crores that you referred to would be 90 crores now per month. Okay.
So that's what annually it will be about 100.
Roughly, yes.
100 crore saving per annum.
But now there are only 6 months left, so you'll have.
Yeah. I mean, at least for calendar year 21, we can.
Yeah.
Okay. Thank you, and all the best.
Yes. Thanks, Jacob.
Thank you. Participants who wish to ask questions may press star and 1. The next question is from Nikhil Kale from Axis Capital. Please go ahead.
Yeah, thanks for taking the question. Just wanted to understand, just wanted to get your views of how is the demand shaping up, especially in India, in the different segments. So if you could just provide us some color of how the demand is shaping up, especially on the two-wheeler and the tractor side, and what are you hearing from your customers?
So actually, Nikhil, I'll take that question. You are right. Different segments are responding differently. Tractors is obviously doing very well. You know that tractor is in positive territory as far as growth is concerned, compared to 2019 last year. What we are seeing is two-wheelers is roughly about 30% down compared to last year, and four-wheelers are roughly about 50% down in June. And proportionately the same thing is improving month on month as far as the schedules currently are concerned. But as we have pointed out, there are many lockdowns happening in many, especially in the big auto producing zones. So this might have an effect on that. But tractors is the best. Two-wheelers follows that, and of course followed by four-wheelers. LCV is somewhere in between. MSCVs is still in a bad situation.
Okay. So in terms of, would it be fair to assume that tractors we could be maybe looking at like a low single digit kind of a decline for this year, given that the demand has been pretty strong to recover?
Well, let's not talk about forecast at this moment. Let's assume, because, there is so much of uncertainty. There are numbers that are there. People have made those forecasts, but let's not go into that. Tractors will certainly do the best so far in the next 2 to 3 months is the expectation. Two-wheelers is also catching up quite fast. So anything that is rural, suburban is doing well, whether it is tractors, two-wheelers, in two-wheelers. I think very clearly you're seeing the market leaders are doing better. Again, the Maruti, the lower end cars, you're seeing a lot of schedules coming in, Boleros, Scorpios, anything which is rural, suburban is doing a little better at this moment.
Okay. Secondly, on the cost front, if I look at other expenses, they are down almost 62% versus the same quarter last year. So, we talked about cost reduction activities that we have done, but also just wanted to understand, are there any expenses which have been kind of postponed in this quarter and maybe can come back in the second half? So, how are you looking at the sustainability of the other expenses line item?
JP Oroitz, essentially, have we postponed any expenses?
No, we don't do that. Whatever is essential is carried out. In fact, probably during the breakdown, we would have done a little more maintenance. I don't think we have postponed any expenditure, revenue expenditure.
Okay. Okay, great. And just a last housekeeping question. So if I look at your SEBI published results, the cash flow statement talks about a cash outflow of almost 1.98 billion for purchase of plant and machinery, whereas in the PPT you've talked about a Capex of 1.35 to 1.4 billion. So just wanted to understand what's the difference here?
That's the exchange difference on the opening block.
Okay.
The euro has moved significantly. It's moved to 85 from 80.
Okay, great. Thanks. And could you just help me out with the financials for Aurangabad Electricals, revenue and EBITDA?
Okay. You want Aurangabad Electricals revenue numbers?
Yeah, revenue and EBITDA.
So, because we do that, giving it segment-wise or?
Not the EBITDA, maybe revenue. Certainly we can't,
Revenue was about 700 million in the second quarter.
Okay, thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from the line of Mr. Nishant Vas from ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity. So first, on the India business side, on the employee costs, if I could get some sense from JP sir, what is the trajectory of the cost structure? Because we see it seems to be quite sticky. So has there been any one-time costs or rehiring post reopening that has led to this situation, or how should we think about this cost line in India?
So in India, we have done some restructuring. There's not been any, it's been within the employment terms, like a notice period, and there has not been any extra payout. So unlike what has happened in Europe. But definitely we've done restructuring, and we have reduced the cost and the count on the head count.
So how should we think about it going ahead? Like what kind of let's say reduction are you kind of envisaging for the second half of the year?
So if you see, and you can see that pretty clearly in the standalone numbers, the quarterly numbers have also come down by 22%, which includes both the variable part as well as the permanent reductions that we have undertaken. So I would think again something like 10% is what we can see is the permanent reduction we would have there.
Okay. And my second question is centered around Europe and MFE specifically. So obviously you highlighted that many of the suppliers are facing challenges. So I would presume, considering the truck market situation with MFE is also in a similar position in terms of the underlying market being weak, and profitability definitely would be challenged. So what is the sense you guys have in terms of MFE as a business, considering now it's been 6 years integrated with CIE? Would we be having a rethink in terms of what is the steady state size of the operations going ahead in terms of mix between revenue and profitability? And the associated question would be then, would that need also to have a rethink in terms of the balance sheet impact of MFE that it is currently having?
Okay. Yes, we are, as we mentioned in all the different conference calls, in MFE we have a tough situation because from, let's say, historical low profitability. We, in all this period, we have been improving the company, restructuring. We have reduced the size of the business, and we closed one of the plants, Eco plant, 3 years ago. Then we also closed the UK business, Stokes, when we didn't see future growth and profitability. So we have been doing this downsizing and restructuring with the aim and with the clear target of making it profitable. Okay, probably not as profitable as other businesses, but we want to have a variable and sustainable business for the future. That's our task. That's what we have been doing in all this period. And of course, we have had in 2020 we have had two negative impacts. Okay, one is the downturn cycle in the commercial vehicle sector. We are now in the bottom of the cycle in this, so this is affecting the sales of the turnover of this business. And also we have the virus impact that also created additional reduction. Our view is that we need to continue working there. We need to wait until the new market cycle comes and the commercial vehicles goes up again in the next years, and the virus impact has gone. Okay, once we see that, we will continue making the decisions. Meanwhile, we think that we need to make this business profitable, and despite the difficulties, I think we can be the ones that can survive in that tough environment in Europe for the components. That's our view.
So, Ander, if I could understand you correctly, please correct me if I'm wrong. You were saying that you would actually like to continue to remain invested and expand the business, and while others might be even in a more difficult spot than you are. Is that understanding correct for MSC? Because I was of the opinion that you were looking to downsize MSC's business because of its low margins.
Yes, it's more or less correct, but what is not correct is that we don't want to expand the business. Okay, what we think is that we will be able to consolidate certain businesses in Germany, so we will continue invested in this business, and the strategy is to make the business profitable with less turnover. Okay, so with this slight downsizing that we have started in the previous year, we will continue until we keep only the profitable business, and we get rid of non-profitable businesses that we have had in our portfolio during some years. Okay, so we are cleaning up the portfolio, and we expect that we will continue in this business with probably with 150, 160 million euros turnover. That is much less than the more than 200 that we had some years ago. Okay, so that's the strategy is to continue, but not growing a lot. I mean, just consolidating.
So, and then the second part of the question which I'd asked, so considering that you were seeing obviously stable state business being much lower than when we had acquired this entity, would you like to have a revisit on the balance sheet side of the impact of this business? Because when you had acquired, obviously the scale of business was much larger, and you yourself.
Yeah. This depends on the profitability of the business. Okay, so we still think that we have a value in this business, and we can be able to get the required margins. So if that is the case, we will be able to avoid any impact on the balance sheet or any impairment on the balance sheet. But of course, we need to see and wait and see and work hard to get it. But in this moment, we don't see the need of the impairment, and let's see if we are able to make all this restructuring job properly and get in the proper methods.
Yeah, the key for the assessment is the cash that the business generates, not the top line. So our target is to finish with a small but profitable business generating cash, so that for the moment we don't see the need of making any kind of impairment.
Okay. Thank you, and that's all.
Thank you. The next question is from Nikhil Kale from Axis Capital. Please go ahead.
Thanks for the opportunity again. So my question is more on the cases, COVID cases. So you mentioned that there have been certain cases at your plants as well. So just wanted to understand, I mean, when you have a case or when you have some cases in your plants, what is the process there? Do you have to kind of shut it down for a couple of days and then re-sanitize it and everything? So how does that work? And especially with Aurangabad, that being like a hotspot, and you had a lockdown for another week, I think, over the past week. So how are you seeing I mean, you mentioned that you've won some business there, but with Aurangabad being a hotspot, how do you see the business kind of ramping up, opening up, and then ramping up to meet new orders?
So, Nikhil, I will take your second question first, which is around Aurangabad electrical. So, Aurangabad, our plant, the situation in our plant is under control. There are a few cases, maybe around 10, 12 cases there, but all of them are big. There are few cases, and the plant is running. So that's not a problem. Second, on what happens when a case is reported, as I mentioned in my initial opening remark, so there is a group at every plant which takes care of that. We see at what, which area things have happened, and the contact tracing and the quarantining of people who have come into contact with them happens. And the local authorities are involved, and then based on their guidance, any further action is taken. So we have not had to close down our plant in any of the cases. We said about 40 cases have happened, but we have not had to close down the plant. More importantly, we provide all help to the affected people in terms of support on doctors, support on getting them admitted to hospitals, even in the case of trying to get them medicines if required. So all those things we try to do. So far, we have not faced any trouble in the functioning of the plant. Of course, as I said, it is not a comfortable situation, but I think our plants are functioning normally.
Yeah, but when Arenaza was locked down, I think the last week they had an extra 1 week lockdown again. So even our plant would have been shut. Would that be right?
No, these lockdowns in Maharashtra don't cover the plant industry.
Okay. Thank you.
No, we have, like similar lockdowns are there in Pune, for example. Plants are functioning.
Specifically, for example, we read in the newspaper that Bajaj plant was shut. Even when we spoke to some of the other suppliers in Aurangabad, they mentioned that because of that 1 week lockdown, even they had to shut down the plants, even though it is in the industrial region.
It depends on what the local authorities suggest. Like the Bajaj plant had separate issues. So it depends on, it is based on the advice of local authorities. In fact, if things go worse and if they ask us to shut down, we will shut down. But that has not happened.
Okay. Thank you.
Thank you. The next question is from the line of Priya Ranjan from Antique Limited. Please go ahead.
Yeah. Last, you have mentioned about growth in export. I mean, there is a significant of export market. So can you just throw some light? I mean, which are the areas where we are witnessing good amount of traction in exports?
Okay. Yes, Andrew.
No, you can answer because
yeah. So if you look at our export, like export performance, our best performing export verticals are gears and wheel ports. So they are the ones that are performing well as of now, and they are much above the numbers that Andrew quoted, and they are getting more and more orders. The idea is to make sure that the other plants also start doing it. Of course, stampings and composites will not be part of the export yet because their products are not so fit for being exported. So other than that, other plants, there is a push to export more. Of course, there is a shift from CIE Europe to India. That is happening in the case of gears, for example, started to happen in the case of forging. So that is the first focus area, and then Wilforge and AEL anyway have a good export presence.
Any similar things which is happening in Europe, like say during the lockdown? I have the companies have mentioned that there's a lot of sourcing has started going to China, and which probably the European guys wants to move back to the Europe again. So any similar kind of situation might happen. And if say any clients want you to add certain business in say MFE, so will you say no at this point of time? Because
Priya Ranjan, you'll have to rephrase. Are you saying will we add business to MFE for customers ask us to? Yeah. Is that the question? The answer would be driven by whatever is the profitability of that business.
Yes.
And that is true for every business. We mentioned in our strategy also there will be strict, monitoring of, the businesses added, Capex, etc. So any new business added will be strictly on the basis of what incremental returns they give to us. If in MFE also, if we get an incremental ROI of more than 15%, of course, we'll be very happy to consider.
Okay. Thank you. That's all.
Thank you.
Thank you.
The next question is from the line of Bharat Seth from Quest Investment. Please go ahead. Mr. Bharat Seth from Quest Investment, you press star 1 for a question. You may go ahead with the question. There seems to be no response from the line of Mr. Seth. We have the next question from the line of Praneeth Gala from Mahindra CIE. Please go ahead.
Yes. Hello, sir. So I just wanted to know, because you just mentioned talking about the kind of exposure that you were taking care in the Aurangabad electrical plant and all. So I just wanted to know, have you have to spend any additional amounts in terms of the COVID-related expense, like in case of sanitation or any medical expenses or precautionary equipment that you have to spend on for? And how much was that in a quantifiable number?
JP, can you give an estimate on what is the additional expenditure?
No, I don't think I can give an estimation of what. It is not very significant, and I mean, we are not even counting them.
Yes,
we are
absolutely.
doing whatever is necessary.
So, Praneeth, so that is the answer. We actually have not made an estimate of that, and in fact, to our CSR fund, we have spent about 25 million on the other COVID-related activities, the PM cares and helping out with during the time of the migrant issue and so on. So we are doing whatever that needs to be done, and we are not counting for it.
Okay. So my another question is that since you also spoke about there's been no kind of reduction measures, especially with regards to anything related to the regular payments that have been previously done. So I just wanted to know, has there been any sort of pay cut to the employees or the auditors or the managerial personnel, anyone in such?
Because I didn't get the question.
So. He's saying, has any pay cut happened to your vendors, auditors, employees? So not so far, but we will, we are actively considering any of these things based on our financial research.
Okay. Yes, sir. That was it. Thanks.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to the management team for closing comments.
Oh, yes. Thank you to all the participants and to all the people making the questions, interesting questions. Just my comment is that despite the difficulty of this moment, I think we need to look at the future with optimism. I think we will overcome this virus impact in the market. The market will come back, and we will be in the market even stronger than we were before. Okay, that is our aim. That is our commitment. So thank you for your questions, your participation, and thank you for trusting on us.
Thank you so much.
Thank you very much. On behalf of ICICI Securities Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.